Alright, now let's create a balance sheet using this transaction analysis, and we're also going to use the income statement and the statement of owner's equity, and I'll show you the relationship between the balance sheet and these two other financial statements. Now keep in mind that a balance sheet is like a little bit more of a detailed form of the accounting equation, which is just that assets equals liability plus equity, owner's equity, or shareholder's equity. Those three terms are interchangeable. So again, let's just call this the balance sheet. And keep in mind that for the balance sheet, we're going to be using cash, supplies, equipment, and liabilities. We would also use accounts receivable if there was anything in there. But right now, accounts receivable is 0. So we're going to be using this 4,400, the 9,600, the 26,000, and the 6,200, and then I'll show you what else. So let's go ahead and make our assets section first. So in assets, we have our cash. We also have, well, let's go ahead and put the amount too then. So cash is 4,400. We also have supplies, and I'll abbreviate that, which is the 9,600. And again, as I said, if there was anything in the accounts receivable account, I would put that number down as well, but right now that's a 0, so I'm not going to put anything in there. And we also have equipment, and that is the $26,000. And then we also have liabilities, and I'm going to abbreviate that. And again, our liabilities is just that one accounts payable. Actually, there's two over here. It's this account payable minus the amount that we've already paid, which is 900, which gives us a total account payable remaining of 6,200. So we'll say that's an account payable of 6,200. And what actually happened was that in the previous video I should have wrote account payable here, and just keep in mind that account payable falls under the liability section of the balance sheet. So our account payable is 6,200. And last but not least, our equity. And this equity figure we actually get from the statement of owner's equity. And we know that our ending capital when we created the statement of owner's equity was 33,800. So we're going to put that right here as our capital. I'll abbreviate that, which is the 33,800. So the total for assets, and I'll just draw a line here and a line here. So the total for assets is going to be 40,000, if I did my math correctly. And the total for liabilities plus equity also looks like it's going to be 40,000. So this is great because this is how we want it. We want our balance sheet to balance. We want assets to equal liabilities plus equity.